All right. So for today, guys, for your final presentation, me, Johnny from Acorn Wealth, we're going to do something a little unconventional. Given what's going on in the stock market today, I had a 1 hour presentation full of PowerPoint slides and things that we've been presenting for the last few months. But given what's going on in the market today, I kind of wanted to throw things out the window and go a little bit off the cuff to address exactly what's going on in the market right now and how we're approaching it. So today's going to be a little bit of an unconventional presentation from me because we're going to go right into the live charts and analyze what's going on in the market right now and how we apply our strategies in dealing with the situation. Obviously, as we go into these kind of live charts and this off-the-cuff type of presentation, it's important to be aware that this is, of course, for educational purposes only. We are not a financial advisor or money manager in any jurisdictional province, so always be aware that trading stocks and options does involve risk of any capital that you invest. So always advisable to speak to a financial advisor before taking any action. And of course, for full disclosure, many of the positions that we will be discussing are being held by either myself or the employees of Acorn Wealth or the Acorn Wealth trading account itself. Okay, so with that being said, today's agenda, as I mentioned, is to focus on the current market conditions. We've just gone through what has most likely been one of the most rapid, active, volatile drops we've seen in our trading history, followed by the largest, fastest rally since 1938. You've got a whole lot of headlines out there that you could be looking at to try and make sense of all of this, but it doesn't really help, does it? Right? So we need to tap into what's really going on and see behind the wizard's curtain as to who's really pulling the strings. So we're going to go through all of that and break into some live charts in just a second. Another unconventional thing that I'm going to say today is I'm going to invite you to join our program at the end of today. So I want to get that out of the way now rather than later. So as we go through today's presentation, you know what it's all building towards, right? So at the end of today's presentation, you will have the opportunity to join us as a member of Acorn Wealth for a 12-month program following our alerts, having access to our indicators and all of our education that we offer as part of the program for $9.97. So that link there is acornwealthcorp.com/toast. And so as we progress down this journey together today, I'll have that open for you there in the chat box that if you'd like to participate, you can. Now, let's go over to the market. As we jump into these things, I want to give you a bit of a background of who we are. So when I first started Acorn back in 2007, I came from a background of always being very fascinated by the stock market, because it seemed to me like it was this kind of puzzle that if you were able to put the pieces together, you could make money at it. And of course, everyone loves the idea of money making you money and, money working for you, kind of flip the story around. But the problem for me when I first started my career 20 years ago is that everyone out there has an agenda that isn't necessarily aligned with yours. Right, so the banks, they want you to invest your money with them so they can charge you interest and borrow against it and charge you fees and so forth. Brokers, very much the same, and and so the system is really aligned to feed off of you. And so when I first started out in my career, I was part of that system. I was part of the machine that was simply feeding off of me. And so I spent a lot of money on courses and indicators and software that may have been good, but it was all sold on this hype and this anticipation of simply putting your credit card down and you're going to make money tomorrow. And it just didn't work like that. Doesn't work that way. So I've been through it. I lost a lot of money, and that was kind of where I started to get very humiliated, embarrassed that, how come there's all these other people out there that are apparently making millions of dollars in the stock market every day and I'm losing? Is there something wrong with me? And so what I went out and did was I went and bought more stuff and listened to more news and more experts and things like that. And I actually blew up 3 accounts doing this, and until I kind of really finally came to the realization that that all of this stuff I was following was leading me down the garden path. And one of my mentors that I really kind of finally tapped into, he took me off this track and said, Johnny, you've got to stop listening to all of this retail garbage, right? It's all trying to take you down the wrong direction. The way that smart money makes money is that they get you to sell at the very bottom to buy all your shares off you, and then they'll rally it and get you to buy back in at the top. Right? And I guess this idea of how the system works you was really well put by one of my clients recently, when because he just joined us a few weeks ago, and he'd missed out on the on shorting the market during this recent crash. So he kind of came in and said, John, I've just joined you. Everything makes sense. I really love what you guys do, but it's so hard for me to pull the trigger right now because I'm underwater on all of these long positions, right? And his words to me was, I'm just sitting here praying that that my stocks get back up to where they used to be a few weeks ago, and God, if I could even get 50% of my losses back, I'd be happy. And I remember this conversation, and I remember how I could feel the emotion over the phone of how he was like, just please God, let the market rally up so I can get out of these positions like I probably should have done in February, right? So the market rallies. We get this huge rally in the market, and he got the answer to his prayers. But what do you think he did once the stocks got back up to his relative prices that he was hoping for? Do you think he sold? No, he didn't, exactly. Because now the emotion has changed. Now it's gone from fear to greed. And wow, this market's rallied so much. How much further could it go? How much more money could I make? Now my fear is gone, the pain is gone. I'm going to indulge in this greed for a while, right? So there's no plan there. There's no strategy. It's reactive, and that's exactly what the system relies on. And that's why they continually make a lot more money than the average guy, right? Let's take a look at the 90 days before the Corona crash, right? Because smart money always seems to have a way of being right. So if you look at the 90 days that led up to the Corona crash, have a look at the insiders behind all the companies that you may be investing in, right? If we look at the insider buying versus selling activity in the 90 days prior to the crash, what do you see? Massive selling. Exactly. Okay, have a look at the last 30 days. Now, look at the number here. This is in the $1,000 units. 4.2 million thousand units, as in $4.2 billion of selling in technology. If we go forward and have a look at the last 30 days, have a look at this. So in the 90 days before the Corona crash, we had 4.25 million units selling in technology, services, consumer goods that were selling. Let's take a look in the last 30 days. 15 million $1,000 units sold in financials, healthcare, technology. You can't even see any buying. So we're seeing these figures, which is reported by Insider Cow, these figures reported by their website are reporting a level of selling in just the last 30 days that is roughly 3 times what we saw in the crash from the corona situation. So very interesting when you start to look at, you know, another way of understanding what's really going on in the market by looking at what the people that actually know are doing with their own money. And that's the only way you really know the truth, right? I mean, the news is full of crap. Let's put it bluntly. The news is entertainment, right? People are out there trying to sell you something. They're trying to entertain you. They're trying to keep you subscribed, right? No one really necessarily wants you to be independent because now you're not going to feed off the system anymore. So when we start to get away from these things that are there to entertain us and to keep us in a loop, we can start focusing on the things that really matter, and they are usually surprisingly simple when we start to break away from that rat race. Okay, this has been warned by the IMF, right? The IMF back in October of last year warned that if a major market meltdown did happen, that there was about $19 trillion of debt that was at risk of defaulting, at risk of going bankrupt. And that number is larger than 40% of the total debt of the largest 8 economies in the world. So, you know, we are in a very interesting situation where the market really isn't being driven by news. It's being driven by the technicals, the algorithms, and the smart money is behind all of this, right? Did you know that when the market bottomed at the absolute bottom of the recent drop, did you know that we had one of the largest buy-ins from insiders in history? Did you know that insiders bought pretty much an equivalent amount of stock in their own companies that hadn't been matched since the 2008 crash, right? So you've got the situation where the whole market's tanked, you know, so you get a stock that's usually $100 going down to 20, and you think, well, that's only an 80% drop. I'll hold on to it. I'll ride through the problems, and it'll come back eventually. But what you've got in this situation is you've got the wealthy, the insiders, the knowledgeable, the powers that be, who've got cash on hand that are buying their stocks at bargain basement prices at, say, $20. And when those stocks go back up to 100, we're not talking about an 80% decline that recovers. We're talking about a 500% rally back up, right? Because what is an 80% drop from 100 down to 20 is a 500% rally from 20 back to 100. So we're seeing this, you know, this situation in the market where I think it's terrible. I think that you know, people are being sucked in to buying at the highs, while the smart money is buying at the lows after the market crashes, and they're selling into this rally, right? So we are in a dangerous situation, I think, and you know, and that's one of the reasons why I started Acorn 13 years ago. You know, because it is very hard to find legit people that you can, you know, trust, that really are aligned to help you. And I often get asked the question when, you know, people look at my lifestyle and people look at me and they say, well, you know, if you're already successful at this level, why teach? And I can tell you why. Because A, it makes me a better trader, because I'm constantly teaching my rules to other people, which holds me accountable to those rules, right? So teaching makes me a better trader. But secondly, it's also because for me, what drives me is I like to be successful. And I can't be Bill Gates. I can't create a new Windows. I can't create a new Apple. So for me, you know, I'm like, what am I really good at? I'm really good at trading. So I want to be the best at that. You know, I want to be able to stand on a podium one day, have, you know, 5,000 clients in front of me, that we made a difference for, you know, all cheersing a champagne glass. So it's maybe a little bit vain, but for me, why do I teach? Because I want people to say, Acorn, they're the real deal. They're really damn good. And the kind of success that we've seen has been great. We called the top of the market in 08, we called it in 2015, we called it recently in 2020. And the methodology that we come back to isn't some kind of magic crystal ball. It's coming back to the basics of the really simple stuff that matters. So as we start to look at what's going on in the market right now, I want to draw your attention to a few key things that we do in terms of a process of analyzing what should we do tomorrow. Okay, so let's start out with this process. When you sit down on the weekend, at the end of the day, whatever time you do your analysis, and decide, okay, here we go. Let's decide what we're going to do tomorrow, right? Most people don't have a process. They don't have a structure. So without that structure, you're kind of left to, you know, roaming through the stock market, hoping that a really good idea is going to hit you, or hoping someone in the chat room is convincing enough to find a good idea for you, or whatever newsletter you may subscribe to. That's fine, but I mean, but if you're in the business of trading, if you're really taking this seriously and looking at the market as, you know, an opportunity to really generate wealth, then you should have a strategy or a list of rules that, you know, when you sit down, that you're going to go through. So the first thing that we go through on the weekend or what have you is a process to decide what we're going to do. Now, one of the first things that we're going to look at in that process is to start with what the real stock market is doing. Now, what do I mean by the real stock market? Well, what I mean by this is we need to take our attention off of what the S&P 500 is doing, because it's very manipulated. And in fact, in 2016, for example, 1/3 of the gains that happened in the S&P were accounted for by only 5 stocks. So as long as those 5 stocks are going up, the S&P looks healthy, and people can be trapped or lured into thinking it's a healthy market because the S&P is going up, whereas this isn't necessarily true. What we really need to be looking at is what stocks in the market are doing. Okay, so rather than looking at an index or an average, we need to look at the actual stocks we're investing in. So this indicator is one that looks at every single stock in the market and calculates how many of them are above or below their 50-day moving average. Now, this is really important because the 50-day moving average is a level of, you know, institutional support. It's where, you know, mutual funds and RSPs and, you know, more the investment style money will typically buy when it breaks above. And it's also typically where they will, you know, add more when it pulls back to that moving average. So when you see a stock break through its 50-day moving average, it's a potential signal that it has lost smart money support, and also potentially a reason for those institutions and things that would normally buy at that level to actually be getting out their stop loss, perhaps. So when you look at this indicator, this tells us how many stocks are above or below the 50-day moving average. Now, if we go all the way back to 2010, every time stocks have gone above 70%, in other words, the amount of stocks above their 50-day has got above 70%, 80% of the time, the market reverses within 1 week. When I say the market, I mean individual stocks, right? So when you look at this data, you can see that we have gotten to a very overbought level of 95%. and we are sharply dropping at the moment. So this is the first thing that I would look at to say, what kind of market are we in? Well, this indicator tells us we are in a very overbought market, which has a 10-year track record of being able to pinpoint reversals. Now, the second thing I would then look at is what's going on with high yield bonds. Now, high yield bonds is a very valuable indicator because what this does is it tracks the sentiment and risk appetite of the really big smart money. Because I mean, in terms of the bond market versus the stock market's tiny, right? The bond market could swallow the stock market whole many times over. So when you're looking at what the really big money is doing, the bonds are important. And so why this indicator is valuable and what it tells us is what money is doing in the background, right? Away from the headlines. So HYG, or high yield bonds, is a vehicle that big money will invest into if they are willing to loan money to corporate America, right? So if you buy high yield bonds, you're saying, hey, I believe that corporate America is going to pay its debts back, so therefore I'm willing to loan money to corporate America. So essentially, it's an instant indication of whether smart money is willing to back the economy or not from a stock market perspective. So this usually should mirror what the S&P 500 is doing, because if the stock market's going up, it should be because it's healthy. If it's healthy, bond traders should be buying in, and you'll see that represented in this chart. When we see the stock market going up and we see bearish signals in this chart, it's a very powerful signal that 1 + 1 doesn't equal 5, right? It's showing you that that there's something up, and the big money is moving out of the bonds. Okay. Does that make sense? Okay, good. What are the big red bars? The big red bars on the chart were our targets when the market crashed. So this is one of the trades we did. We bought puts on HYG up here at around $88, and our first target was here at 80 because of the support back there, and our second target was down around 70, which was the extension of that double bottom. So the red lines are actually our trade targets that we had predetermined. Okay, so so what do we see at this point when we take into account those two indicators? Well, number one, stocks above their 50-day moving average has gotten up to 95%. We're currently at 78. So we are in an extremely overbought scenario. That's what the first indicator tells us. The second indicator, when we look at HYG, what does that tell us? Well, HYG tells us that it is starting to lose support. The way that we determine if it's losing support or what's going on is now by looking at the pattern and the price action in the chart. So a quick question for everybody. How many people here would say they're very comfortable with charts and patterns and technicals, and how many people are not, that are kind of just starting to learn or are getting comfortable with it? Okay, a few very comfortable people. Excellent. Okay, so when we start to look at the pattern side of things, it's extremely important. So keep in mind that if you're going to go listen to JP Morgan, for example, they estimate that close to 95% of all of the volume in the stock market each day comes from high frequency trading or algorithms, or in other words, computers that make decisions based on rules, based on patterns. So the importance of understanding the pattern is critical, because it's where 95% of the volume is being driven from. It's the rules that dictate when they buy and sell. And when it's 95% of the volume, it's pretty important to know when that's going to happen. So when you look at the S&P 500 as a starting point, right, let's drill down into what's been going on recently. Okay. Now, one of the reasons, let me just clean this up a little bit for you. So back on Monday of this week, we warned our students that we felt a crash was coming, that there was a very high risk that the incredible bullish market that we've had was coming to an end. In fact, when I sent that to Jeanette on Monday, she kind of laughed at me and said, I hope you get some sleep, because I'm down here in Australia. And she's like, yeah, why are you still up? I'm like, well, I've been spending 6 hours researching all of the very best shorts, because I think this whole thing's going to fall apart. And sure enough, 2 days later, it did. So how were we able to predict that? Because it wasn't from watching the news. It wasn't from trying to predict what the economy was going to do or things like that. It was based on following where the money was going, where the smart money was going. Okay. Now, when you look at the S&P 500, which is what we see on the chart here, does anyone notice what kind of pattern formed at the top there? What pattern do we have? A head and shoulders. Exactly, Gary, John, JB, David. Yep, absolutely. What we had was a head and shoulders on the hourly chart. Now, for those of you that don't understand patterns as well, the head and shoulders is, out of over 100 patterns out there, it's the #1 highest probability pattern to predict the top of a market, or the top of a crypto, or the top of a stock, or whatever, right? From an algorithm standpoint, the head and shoulders is the best indicator that a market has topped and there's a big downside coming. It's in fact how the 2008 crash happened. All right, so when we start to see that that identifiable head and shoulders right there on the hourly chart, that was the warning sign that, hey, things could be about to get really nasty. Okay, so that was part one. Part two, when we go and look at that smart money indicator that I just showed you on high yield bonds, what do you see on the high yield bond chart? Another head and shoulders. Exactly. So what we're seeing now, when we not only look at the S&P 500, but we also look at the appetite for risk from the bond traders, which is the really big money, we see the highest probability sell signal that we can tap into, right? Now, the other thing that we can then look at is this indicator down the bottom, right? So everyone sees this red line. This is a money flow indicator. Now, you've probably heard of Chaikin money flow. This is similar, but it adapts that algorithm and builds a few extra things on top of it to look for, you know, where the real money behind the system is going. So, you know, when you get educated about how to trade stocks, many people have learned the, you know, the basics, that an uptrend is higher highs and higher lows. A downtrend is lower highs and lower lows. But that's really not correct. In fact, it can be very misleading, because a real uptrend needs to have more than just price movement, right? A real uptrend needs to have higher highs and higher lows, and more volume coming in on the up days than the down days, and it should be closing at the top half of its daily range, and the range of the daily candles should be expanding. So there's actually quite a few things that really need to be going on if an uptrend is happening. So price alone is not really an indicator. And in fact, that's why head and shoulders are so powerful, because they are designed to trick people into buying, because the stock has made a new high, right? The stock breaks out, and that's the top. That's the beginning of the end. They're designed that way to suck people in. As the stock breaks out, retail traders buy at the top, insiders sell, and what you see is that selling reflected in the money flow. So watch how the stock goes higher and then create an equal high over on the right. But behind the scenes, you can see that smart money is actually selling off, because what that indicator down the bottom is looking at is all of those attributes that we've just talked about, where it's closing, the volume, the scale of the daily movements and things like that. So as a leading indicator, this was predicting a down day was coming as well. Okay, so that's the second thing. Let's go back to the S&P 500. So not only did we have a beautiful head and shoulders pattern, but let's just erase that squiggly drawing on the screen. What kind of pattern do we possibly have now? Right, beyond the head and shoulders, what's possibly going on here now? Yep, a bear flag. A bear flag is what's possibly going on here. So we've had this straight down bar followed by consolidation. And if we zoom in once again to understand the pattern, right? What was happening yesterday is the market rallied back up, right? The market was rallying up after that big downward turn. So for some people, that would have created a feeling of safety, that they could get back in here, not worrying about, the longs that they still have. But let's analyze what that back up move actually was, right? So this delves deeper into the idea of patterns. So how many people in this room have been taught about upward channels? How many people have been taught that upward channels are bullish, right? How many people have been taught that when a stock breaks above its moving averages, it's a reason to buy, right? Both of these things are wrong. Both of these things are incorrect. So let's start with the idea of upward channels. Your job as a trader or an investor is when you look at the chart, the first most important thing, before you really even know the name of the stock you're looking at, the first thing you need to determine very quickly is the stock in a pattern that appeals to you? Because if 95% of the volume is being governed by patterns, then this is clearly a very big win if we know that we're on the right side of that volume. Okay, so when you look at a chart, the first test you want to give it is what kind of system is it being governed by? Excuse me, what makes it go down or what makes it go up? Now, if we look at the S&P 500 and you see how we dropped from this head and shoulders, can everyone see that when the head and shoulders was happening, that the S&P 500 cut through those moving averages like they weren't even there? Would everyone agree? The way that the S&P 500 moved at that top, you can see the price action just cut back and forth through those moving averages like they weren't there, right? Now, the reason why is because they're not. We were in an oscillating pattern. So when we are oscillating, the moving averages don't work. You do not use them as support or resistance. You do not buy when it crosses the moving average, and you don't sell when it drops below. We don't use RSI. We don't use MACD. We don't use stochastics. We use a totally different set of indicators if we are in an oscillation pattern. And the support and resistance that matters are the straight lines, the shape of that chart or pattern, right? Now, if we're not oscillating, then we're in momentum. And when we are in momentum, now this is when your moving averages and your RSI and your MACD and things like that become valuable. So what you can see here is that the S&P 500 went from this oscillating head and shoulders pattern to a downward momentum move, right? And you can see the way the moving averages all of a sudden become very important. And because we can now recognize that the moving averages are in control, that tells us that we are in a momentum downward move, right? So that's always the quick test to determine what kind of system we should be considering is looking at whether those moving averages are working or not, and what kind of movements going on with the system we see on the chart. Now, what's happened since then? Okay, so we had this downward momentum, and there you can see this sharp upward spike. Now, based on what we've just talked about, everybody, are we in momentum on that upward move, or are we oscillating? What would everyone suggest? What do you think? Oscillating. Exactly. The way we are moving is not moving average based. We're bouncing back and forth in this upward channel. So again, if you've been taught that an upward channel is bullish, you might want to rethink that because an upward channel is actually a bearish pattern. Okay, as Andrew said in his presentation, most of the indicators out there and so forth are lagging indicators. They talk about what's happened in the past, and so they have a limited usage or a limited amount of value. The number one highest probability or most reliable indicator for a leading prediction or telling us what's going to happen next are patterns, because they have a clearly defined set of rules as to how we trade them, the probability, all of those things. So when you see an upward channel, while the direction may be upwards, what it's predicting is it's going to have a downward move afterwards. It's an upward consolidation before another big drop. So when you see an upward channel, you don't chase it and buy it. You're actually planning and preparing to short the thing, right? So when we look at the way the S&P 500 has moved recently, we have this big downward momentum move followed by this upward oscillation in the channel, which creates what we call a bear flag. So you have your flagpole here, and there's your flag there. Okay? So what that basically suggests is another 5% drop from where we're currently at. Right? So again, as we go through this, note that nowhere here are we reading through the news. We're not worrying about the political influences. We're simply looking at where is the money going, and what are the rules telling us to do. Right? Make sense? Why a 5% drop? Well, if we go back to the daily chart and we look at this this pattern played out, the flag. One second. The flag is there. So it's looking at a drop down to around the 28.50, 28.56 level in terms of a continuation of that flag pattern. Okay. So that's what's going on when we look at it from a price and rule-based and patterns situation. So when we start to go through our checklist and we say, okay, well, what is the S&P 500 doing? And we look at the pattern, well, we had a beautiful head and shoulders pattern on the hourly chart back on Monday. And that is why we warned all of our students and our subscribers that we were, looking to get out and protect our profits and starting to refocus on shorts. Okay, and obviously that's played out well so far. Now, the next part of this process is once we look at the bonds and the index and understand what's going on from a rule-based scenario or perspective. The next thing we then take out of that is what kind of trade should I be looking for? Should I be looking for a long or a short? And so as we started out the week on Monday, the rules were telling us we should be looking for shorts. We're in a very high probability, high risk zone that this market's going to drop. So with that answer coming out of our rules, we then go and get to scan or search for the best possible short scenarios. And the way that we find those is by building a recipe of what the perfect short would be and programming that into technology to go find it for us. Okay, so when I think of a perfect short, what are the ingredients of that? Well, firstly, it's going to be I want a stock with a very bearish pattern, right? So just like we saw in the S&P 500, we want to see a very bearish pattern on the individual company. So take, for example, Plug, P-L-U-G. If we approach this purely from a technical perspective, what is the system that's going on behind this stock, guys? So when you look at this, would you say that this stock is a momentum stock or an oscillating stock? Oscillating, exactly. Right, it's moving back and forth. We can see that the moving averages are not playing an important role in the way that the chart moves. And so because we know it's an oscillating stock, we know how to treat it, right? If a stock is oscillating, what's going to make it go up or down? The oscillating support and resistance. And when we look at a stock like PLUG, we can see there's a very, very clear level of oscillating resistance right at $6. Does everyone see that? Right, this is your classic textbook double top, right? So because we now know it's oscillating, we pull out the rules for an oscillating stock. In an oscillating stock, we need to short it on the way up. If we were long, we would be getting out of that position on the way up. We sell into strength because the probability is, the rules are that that stock is going to reverse. It's not going to keep going. We shouldn't hold out for bigger profits because probability tells us they won't be met. They won't be seen. Okay, so when we look at this stock and it's rallying up to that $6 mark, that if we were long is exactly where we would have sold everything. But more interestingly, this is actually where we were looking for to short it, right? Because this is where the system in control is dictating that the stock is going to reverse. Very simple, all right? So then we take it one step further and we say, okay, we have this wonderful pattern that is suggesting that all of these algorithms and things that really matter behind the scenes are going to be shorting it and selling at these levels. And for the first, I'm going to say 6 or so years of Acorn, that's all that we taught, right? We didn't go any further beyond that because I was, a pure patterns and chart lover. I thought that everything you needed to see was in the charts. And that's all we taught for the first 6 years of Acorn. But after a period of time, I got sick of looking back at some of the stocks that I was in and out of for a 10% or 12% or 15% gain and I'd go back and look at them 3 months later and see they were up 50, 60, 100, 200%, etc. And I thought, well, hang on, if I'm doing all this work to develop the strategy and I'm leaving all this money on the table, I need to figure out why I've missed out on those big moves. And as I went back and started to look at the differences between the ones that only went up 12% versus the ones that went up 2, 3, 4, 500, etc., something started to come out. Something started to reveal itself, which was that on a lot of the really big movers, there were insider activity, or there was insider activity prior to the rally. So if you take a look, for example, or the drop. So take, for example, Plug, which we've just talked about. I'm just going over to a free website here, insidercow.com, which allows you to look up insider trading. And what you can see here, look at this selling that happened, like basically nothing all of last year. And then all of a sudden we hit February and millions of dollars of insiders start to leave. Not just insiders, but the general counsel, the president and CEO, the corporate controller, all of the really important names start selling millions and millions and millions of dollars right before the crash. And not just right before the crash, but after the rally back up. When it bounces back up and everyone's saying, oh, it's okay, things are settling down. And the insiders are saying, yeah, but can you please sell $10 million worth of my stock? Thank you very much. Right? I mean, when you're looking for the truth about something, I mean, what else is more reliable than following the money trail? And that's something that it took me a long time to really, put this in stone. But if you think about it, why would you buy a stock if the insiders were selling, right? Why would you put your money into a company that you're hoping has a, double or triple digit upside to it? Why would you do that if the CEO themselves or this chief financial officer and things like that were selling all of their stock? Surely someone in their right mind wouldn't dump millions of dollars of stock if the company was about to go up 200 or 300%, right? So when we start to see this, it's very, very interesting. And when you align that now as a 1-2 punch with the chart pattern, now we get this powerful combination of technicals as well as the story behind the company or the fundamentals that are indicated by the insider activity. Does that make sense? Okay. So as we start to go through and look at the way that the market is situated right now, if I'm going to go long a stock, and I have some longs, if I'm going to go long a stock, that stock needs to be perfect, right? It needs to have huge insider buying, right? Take, for example, KALA, right? Now take a look at this stock. So obviously we had the market crash in February, March, right? What did this stock do while the market was crashing and the Russell 2000 gave up 4 years of gains in 4 weeks? What did this stock do? It formed a bullish downward channel and actually started to break out and go higher. What were the insiders doing as the market crashed and this stock consolidated? What the insiders do? Well, they bought. We actually had directors buying $5 million worth, right? We had directors buying, or 10% owners buying as well, right? But the thing was here is that during the crash where everyone was wondering, what should we do? The insiders were loading up on their own company with their own money. And that's a level of insight and a level of research that we're able to tap into by piggybacking off that kind of movement, right? I don't care whether you're Warren Buffett or JP Morgan or Goldman Sachs or whoever. No one's going to know more about the company than the insider, the CEO, the CFO. No one. So you can put all of that rhetoric aside, because at the end of the day, am I going to put my money into a company while the CEO sells 50% of his holdings or her holdings? Hell no. The only company that I'm interested in buying is a stock where I see the people that matter putting in huge money of their own, right? I mean, take, for example, another company. Let's look at MYOV, right? Look at MYOV. Look at the action here in terms of the buy-sell. Everything you see here is purchase, P, all the way down. Hundreds and hundreds and hundreds of thousands for every single trade. Then you go back into late last year and look at the insiders here. The insiders were actually bought over $180 million worth of stock all at the same time. And these insiders already owned over 80% of the company, and they're loading up even more. And you can see that trend, like the numbers just get silly. It's a massive accumulation from around that $8, $12, $7 range. Now take a look at the chart, right? Take a look at the chart. So if we go back to understanding the pattern first, and we say, okay, well, what was the system going on that governs this high level of volume? Well, what we had there in May, June, July, August, etc., is we had this pretty much perfect downward channel. And a downward channel is bullish. So the moment that it broke out above that downward channel, it was a buy. Right? And we actually suggested it as a long to our students, for ourselves, 2 days before that massive jump happened. But surprise, surprise, the insiders had loaded up on hundreds of millions of dollars worth at $6, $7, $8 before that happened. Now, the reason for the rally was they actually announced that they had an approved treatment, one of the first ever successful treatments for lupus, right, for kidney disease. And they skyrocketed. Now, the coronavirus thing happened and the stock suffered as well as many others did. But the way that it suffered was it retreated back to the same price it rallied from in a downward channel again. So not only did we catch the first big part of that move 2 days before it happened, but we then had a new trade at the same price of $6 when it came back to that level, and the insiders started loading up again like clockwork. And this thing is likely to continue going strong. It's very likely to hit 23 bucks, right? So in this kind of market, if I'm going to put my money into a trade, it needs to be really good. I need to see the insiders so confident that they are immune to the risks of the economy that they're willing to put 2, 3, 5, 10, 20, 30 million dollars of their own money into it, right? And at the same time, we are faced with the risk that we could have another drop as big, if not worse, as the first one we saw back in March, right? So when we start to say, okay, if the qualities of the long need to be this high probability pattern, this level of insider buying and things like that, we then need to say, well, at the same time, where's the opportunity to the downside, right? And this is where we start to look at some of these very high quality shorts, right? MC, insiders are dumping it, right? Let me show you GWRE. Let's have a look at this one, right? GWRE, technology stock. Now, this was originally a good short because it was in an upward channel. Does everyone see the upward channel that we've got drawn on the chart, right? That tells us, as a leading indicator, again, an upward channel is bearish, and it predicts we're going to have a drop of this amount, right, down to $85. It ended up going lower than that, but that was the target from the upward channel. Now, what we had going on at the same time as this very bearish upward channel is we had the insiders dumping as well. So I'll bring up that data, GWRE. All right. So what you can see is that leading into the end of the year in September and December, even into February and March, we actually had key people, including the chief sales officer, chief delivery officer, chief operating officer, chief financial officer, selling huge amounts of their own stock. I just don't understand why anyone would buy a stock that the insiders that knew everything about the company was selling. I've never understood why people are willing to argue with the CEO of a company in terms of the potential upside. I mean, I get it, right? I get that there's reasons why people sell, and maybe they need to pay their taxes, or they want to buy a new car, or I don't know, whatever the reasons are that people sell. But I mean, unless you are absolutely desperate for cash, an insider isn't going to sell stock in his own company that's about to go up 100%, right? I mean, if there's a reasonable opportunity, this stock is going to significantly increase, that you'd be nuts to even sell a single share. So, you know, when I start to see selling, even if it's 10 or 20%, I wouldn't touch it with a 10-foot pole. It doesn't mean the stock's going to crash, but it also kind of takes away, though, from the likelihood that it's about to triple. So any insider selling is a no for me, especially in this market. In fact, what we're obviously looking for here is where we've got a high level of selling. Let's take another look here. Let's look at something like ARES. ARES, which is another company we've alerted as a short, had massive selling going into the end of the year, all from the co-founder, executive chairman, and the co-founder obviously has another founder, and their partner was selling too. The two co-founders have been dumping double digits of percentages of their own positions. Right? You see nothing leading up to here, then all of a sudden they're selling like a fire sale. Let's have a look at the chart. Right? Have a look at the stock. Where are we at from a patterns perspective? Can everyone see the double top here? Right? Not only do we have this beautiful pattern telling us the rules of where we get in, where we get out, where our stop loss should be, not only do we have that probability on our side to remove anxiety and the emotion of trading, to give us rules, but we also have, backing that up, the fact that the insiders, the two co-founders, selling their own shares. So what does that message send to the market, right? So you're going to see example after example after example of this. I mean, the one I just mentioned before, GWRE. One of the reasons I'm particularly interested in this one is if you actually have a look at when the insiders were selling. Take a look at this data. When the insiders were selling was in March. Most of the selling happened here around $79 to $80, right? The big majority of this selling from the chief sales officer, the guy in control of revenue, right? The chief sales officer, the chief operating officer, the interim chief financial officer. When they were all selling, it was around $8. Guess when that was? That was at the bottom. They didn't sell into strength. After the stock crashed, they sold at the bottom. What does that tell you? And now we're back up here at 112, right at resistance. You know, this is the kind of thing that matters. I mean, you can attend as many webinars as you want. You can buy as many indicators as you want. have all the fancy software. Trust me, I've done it. I lost hundreds of thousands of dollars to various places when I was trying to figure this all out 20 years ago. But, you know, we all get attracted to these bright, shiny objects. But at the end of the day, the thing that's really going to make you money long term is understanding the simple things. It's understanding something as simple as whether a stock is oscillating or momentum. It's understanding something as simple as whether the CEO is dumping $100 million of his stock onto you as you buy it, or whether they're loading up with their entire bank balance because they are seeing a huge opportunity in their own company. These are simple things that are either not acknowledged or not known about by most traders, right? So remember that the system is there to create chaos. If the system is doing its job, they want to scare you. You can't do this. You need a degree in math. You need 12 hours a day to stare at the screen. None of that is true. You need to get rid of all the noise and start focusing on stuff like this. All right. I mean, we can go through many different situations here. If there's any stocks that you might be specifically interested in, by the way, feel free to ask. But I mean, we looked at MC, we looked at GWRE. There's plenty of other examples like this. Let's look at DT. Take a look at this one. Okay, so DT, right, was in momentum. You can see the moving average really playing its role here, and then it starts to oscillate at the top. That's a warning sign that it's about to break down. All right. Now, when you go into the insiders, take a look at what's going on. All right. So we'll bring this up. Check this out. The amount of selling was massive right here in one transaction from this 10% owner, Thoma Bravo executive, etc. They sold $1.01 billion in one transaction. We're talking about a number so big that this website doesn't even put it correctly in the readout. And that's happening at the same time as the Chief Financial Officer, CEO, and Senior Vice President of Global Sales all selling as well. That's happening at the same time that we form this bearish pattern, right? This bearish pattern that's oscillation and starts to break down. Does that make sense? Can everyone see the process here? All right. So what we're trying to combine here is the things that we believe are the most important. One, how do we get 95% probability in our favor or close to that? Well, let's follow the rules that the algorithms are following. Let's piggyback that and anticipate what's going to happen next instead of reacting to it. And so let's go and find those trades that have the perfect patterns that are executable now, right? And then if we're going to make that probability even higher, let's incorporate the idea of what the insiders are doing with their own money, because who could possibly know better than them? All right, so DT is an example, and there's plenty like this. I mean, you've got let's think of another one, PG, Procter & Gamble, right? The insiders are dumping this stock. And as you can see, it's reversing beautifully here, right from a resistance area. Right? Procter & Gamble, hundreds of millions of dollars. So this is how the kind of system fits together. Can I show you one more? Sure, I'll show you one more. ALGN. I have a ton of ALGN puts. Why did we buy ALGN puts? Well, firstly, if you want to get sucked into the story of the company, ALGN is a company that makes cosmetic braces, right? They make Invisalign, invisible braces. So with doctors and dentists and orthopedics and any kind of surgery or elective surgery being shut down across the world, they don't really have very many open sales channels to be promoting their product, and dentists aren't there to recommend them to customers. So, and especially seeing as they are, $10,000 to $15,000 to buy, this is also when people are losing their jobs, is not necessarily a must-have. Now, what happened with ALGN is as we rallied back up to these highs, the insiders have been dumping, right? And if you look at where we are, we're at another beautiful double top, right into resistance. The insiders are dumping the stock. You can actually see here, we'll look it up. Go back to the home screen here, ALGN. Okay, have a look at that. Chief Financial Officer sold $1 million worth at 251. The director sold 2.5 at 251. The Chief Financial Officer, look at it, millions and millions just a couple of weeks ago. Is that the kind of message that you want to send to your shareholders? Hey, shareholders, we're rock solid. This is a great company. We're going to be okay. The long-term picture looks healthy. And then the shareholders say, good to hear that. I needed some reassuring. What are you going to do about the company's stock? Well, I'm actually selling all of mine. What a mixed message. And this is why, if you really want to know the truth, focusing on what the insiders are doing with their own money is, in my opinion, the best research you can do. And when you marry that up, again, with the chart pattern, you have a winning combo, right? Now, I'm going to take some questions, and we'll continue to look at a few other stocks here. But that's what we're all about, guys. It's about focusing in on the things that really matter, the patterns and the insiders. Because above all of these other bright and shiny objects, as I heard talked about earlier, we come back to the things that really drive movement. And they don't sound sexy, and they don't have a special buzzword and things like that, but they work, right? And that's why the financial system is there, to constantly derail you with emotions and news and hype. But if you can, look away from that, if you can turn that off and start trading smarter instead of harder, the opportunity is to focus on things that are actually surprisingly simple, that are much more effective than all of these extra little fancy things you could be distracted with. So the course, as I mentioned at the very beginning of today, is structured around teaching you this whole process, right? So it's not an indicator. It's not a trade alert service. It's everything, right? So what we've done in this course we've put together all of the components that you need to be successful with this strategy into this one introductory course. Because for us, we have, when the market crashed, we nailed it. We warned people to consider getting out of everything and going short in December. And then again on January 16th, we had these two massive webinars where we warned everybody. And we killed it. We were bang on it. We were watching that market drop, making money every single damn day. It was one of the best 3 weeks I've ever had in my trading career. And not only that, but we then exited them at the bottom and called the rally, right? Because everything said it should go back up, even though I didn't agree with it, even though I didn't understand how. The rules told us it was going to go up, and we've had the biggest rally since 1938. And I strongly disagree with the fact that the market should be rallying, but that's got nothing to do with what we should do with our money. Like, we have to follow the rules. So we've been killing it, and it works really well. So we've tried to put together a course that is going to give you the opportunity to sign up today and walk away with an immediately executable strategy. You know, it's not like you buy the course and then, oh, you've got to buy this other piece of software to make it work. And oh, you've got to have this to make it work. And oh, here's a new indicator we're releasing in 3 weeks from now, and you've got to buy that as well. You know, the idea of this is to put you in a position where you can replicate what we do with our own money and start using it right away. So on the educational side, the first module is to teach you how to develop that foundation, how to sit down in front of the computer each weekend or each Tuesday or Wednesday or whatever you decide is appropriate for you, and look at the market and say, okay, should I be long or short? And you're going to go through this process that we give you that's a structured system of saying, is the market going to go up or down based on probability instead of news or emotions? And from that, you're then going to be able to say, okay, it's bullish, so I need to scan for longs. So now we delve deeper. What kind of patterns are the best longs to look for? So instead of just randomly hoping we find a good idea or wandering through Wall Street, as I put it, this is where we're actually able to define exactly what makes up the perfect short, right, or the perfect long. And so in module 2, in stage 2 of the process, in the educational side of things, you're going to learn how we do that. Learn what are the top 5 patterns that we focus on and why are they the best, right? And the why behind all of the kinds of decisions that we make and how we measure the risk versus reward, and make this a business instead of just a gamble, something that's going to really last long term. And so after we've then laid that framework and taught you, I mean, that's about 4 hours just on patterns alone. Talks about oscillation versus momentum, what indicators to use, when to ignore those indicators, etc. So you have the full picture. Once we've built towards this foundation, the final step is then going out there and scanning for ideas. So the final part of the process is where we're then going to give you the scans that we developed over the first 5 to 7 years of my trading career. My focus was figuring out what I wanted to trade and then designing a scan that would find it for me. And so in this module, this is where the kind of the fruits of that labor really come to roost, that allow you to go in, log into the software, click the button, and be able to list all of the stocks where the insiders, the CEO, the CFO, the lawyer, all of those people are dumping 60, 70, 80, or 100% of their own stock, all at the same time, while the pattern also says that the timing is correct for the trade to happen. And that's where we get both. That's where we get the perfect storm, and that's what we're looking for. Okay, so not only do you get that short scan, you've got the long scan as well, which on the flip side is looking for where we have insiders buying huge amounts of stock, and that's where we start to get interesting. I mean, take a look at this one, for example. This is pretty special. KRTX. So this is a therapeutics company. Just to give you an idea, like this is the kind of thing I would, well, not right now, but this is the kind of thing I would have been happy to hold despite the market volatility. Because, I mean, we originally alerted this out to our students around $11 something. The insiders bought over $11 million just from one person right before this spike happened. Right? They increased their percentage of personal holdings. I think it was 80-something%. That they basically doubled their investment with their own cash and put $11 million in the stock down around $10. I think it was $16 to be precise. And sure enough, a month or so later, the thing rallies from $10 to 150. That $11 million that they put in is now worth 160 million roughly in 2 days. That's the kind of thing I'm interested in, because that's surely a good sign when the insiders are doing that. That's unheard of, and there's only one reason people put money in their own company like that: greed. So, the whole idea of this scanning is to recognize that we don't need to trade every stock. Just because Tesla looks like it's going up tomorrow doesn't mean we should buy it. Just because Boeing looks like it's going to crash tomorrow doesn't mean we should short it. The reason we should be taking trades is because they've met every little thing, every little criteria that defines the best trade. What could we possibly ask for that would make this a better trade? Right? And when you start to build that list and that recipe, you begin to eliminate the noise, and you begin to specialize in the patterns that really just consistently work, right? So that's the educational side. It's about 8 hours of tuition in the course that's going to provide you with these indicators and skills that will last a lifetime. And from there, now we get into the fun stuff. Now we get into the actual trades themselves. So this is all real money. The stuff that we're teaching you in this course is the same things, or are the same things that we use in managing our own money, our own trades, our own corporate funds. It's the same stuff. We're not going to teach you something we don't use ourselves, and that is a big differentiator between us and many others out there. Right, so we're traders first, teachers second, and when we send you our weekly video, right now it's more than once a week, it's more like twice a week because of the amount of action happening. But when we send out our videos once per week, what we'll tell you is these are the 5 trades that we're looking to get into with our own money. This is the entry signal, this is the stop loss, this is where we're looking to take our profit off on the first target, the second target, the third target. All of that goes into it. What options we're considering, right? All of that kind of thing comes out in this once weekly video. Options, everything. If we find any super special setups during the day, it's rare, but if we do, we'll also send you a text message that we've found something that was popped up on our radar throughout the day. But the idea behind these alerts really is more focused on setting and forgetting, right? We're not focused on day trading. I don't want to have to sit in front of my computer to make money. The reason I got into investing was money to work for me. So if I'm still having to sit in front of the computer at 6:30 in the morning, then I'm still working for my money, aren't I? Andrew, yes, it is a one-time fee, absolutely. Let me go back and have a look at some of these questions, but let me just finish off on this one. In terms of the performance, I see a lot of familiar faces in the room. You guys were there in February when we called the top of the market. You guys were there in March when we called the bottom. How many people do you know out there that have actually called those 2 reversals and had live money in the market, right? That's what you get with us. So our guarantee here is that if you don't see 100% or the potential to make 100% return over the next 12 months, then your next year is free. You remember when we launched this guarantee back in February, I said to people in the first webinar, when we first launched this concept of the next year being on us, I said to people, I don't think that we'll be worried about 100% being possible or not within a few weeks. And then we saw 4 years of growth evaporated in just weeks. We are on the precipice of another huge potential drop. The amount of insiders selling versus buying, remember, we had 20% over 3 months. 20% of the current selling that's going on is what we saw in the 3 months before the Corona crash. We've now got $15 billion of selling in just the last 30 days in just one sector. We're seeing 3 to 5 times the levels of selling from insiders in the last few weeks than we did in the first drop. So if you're ever going to, knuckle down and add something very valuable to your portfolio, this is it, right? This is a buddy of mine who I met in Mexico 5 years ago, and he was asking me back in March or February how to understand more about what I did. I told him, come to this workshop, come to this webinar, the very same kind of webinar you're in right now. He signed up for this same offer for the $9.97, and 3 days later messaged me and said, good morning. Have you made your $9.97 back? Oh yeah. Should I stay in? And so, I mean, that was a 2-day return for him where he'd already paid for the course. The $9.97 course covers everything. It covers the indicators, it covers the scans. You'll have the indicators and the scans for life. You'll also get one-on-one training. So you're not just going through a process where you're another name in our email database. Every one of you signing up today is going to have your own personal coach who's been through the strategy. All of our coaches are students that have been with us for at least 5 years, and then we hire the best students, the ones that are making the most amount of money. We bring them onto our team, and they become our coaches. Greg and Sean are our 2 head coaches, and they'll be in charge of working with you in your early stages here, get you fast-tracked through the program, knowing where to look, what questions to ask, what alerts to be looking at, etc. That's part of the program, and you also have those alerts, those weekly videos and daily updates on every position. You'll have that for 12 months included as well. So for the $9.97, you're getting a very good deal. All right. All right, I have some questions coming up. Okay, let's answer those in just a second. So let me put the link in the chat box. Again, go to acornwealthcorp.com/toast, because today is a toast to traders. There you go. There's the link in the chat box there. Okay, questions on REZI. All right, let's have a look at it. REZI. So, all right, let's firstly start with the pattern. If we look at the way this stock has moved, you can quickly see there's oscillation here, right? The moving averages are not in control, and very quickly you can see that there is a downward channel system that plays into this into this setup. So, if I were long on this position, which I would be, this is a bullish pattern. It looks good. We can see the smart money behind the scenes is buying as the stock goes sideways. So the price of the stock doesn't change, but the smart money indicator tells us the insiders are loading up as price stays flat. So I would definitely like this as a long position, but I would have been a seller of it at 1043. So I would personally be out of it now, and I would be looking to buy back at $11.07. So if I were in this position, I would have sold the rally into resistance, because it is an oscillating pattern, which means the probability is it's going to hit resistance and bounce down. Now it may break out, and that's the point where the trade makes sense again, right? So think of it in terms of probability. When you run into resistance on an oscillating pattern, the probability is telling you it's going to bounce straight back down. Let's say that you've now got a 70% chance of the trade losing a lot of its ground, right? So why not sell it? Why do people not sell when it runs into resistance like that? Well, people don't sell because they're lazy. They're lazy, but they also hang on to this fear of missing out, that, oh, what if I sell here and the thing goes up another 10 or 20% tomorrow? Right, this greed factor. So we start replacing all these rules and things with the emotional decision making, and we lower our probability significantly. When we are in an oscillating scenario like we are here, the rule is to sell as we rally, sell into resistance, and if it is going to go further, no problems. We'll pay more for it once it breaks through that resistance, once it gets on the other side at $10, for example, $10.53, then we'll buy it back and willingly pay more, because now my probability of success has gone from 20 or 30% to 70 or 80%. And all I have to give up is, 20 or 30 cents of the trade. Well worth it. Make sense? Okay. What's the matter with these CEOs? I agree. But what amazing opportunities we're able to pull out of that. Okay, where can we find the insider activity transactions? So we go through everything in the course. Again, the course isn't just a one-stop, one-trick pony kind of thing. It really is a course. It's going to take you through the scans, the indicators, the research, how we developed it, everything. Jerry asks VERI. VERI is a stock, as you can see here, that we actually alerted back at $3.57, I think it was. Huge insider buying. VERI had a massive amounts of insider buying. We alerted it back here at $3.50. It's since gone to $13, so it's one of our favorite stocks. The running joke at Acorn is we like very, very, very much. Anyway, again, huge insider buying on Very. I don't think I'd be a buyer of it now because it's already up so much that you've lost the leverage that it offered back when it was $3. But as you can see, huge buying at $2.73. $500,000 each transaction there from the president. You've got all of this accumulation going on at those low prices, and surprise, surprise, it's now up from $2 to $12.50. Likely to continue on to $23. So there's about another 100% upside potentially on this, but I wouldn't give it much more than that. So I would personally, I'm not in this anymore. I got out of it because I think there's better opportunities with more upside potential. And I think this is just getting a little bit long in the tooth. So we want to go back and find other longs that are just starting this journey versus ones that are coming towards the end. Let's go for the next question. 4 days ahead, you nailed it. I was new then. Right on, Gary. Cool. It's nothing. I can sit here and do the whole song and dance about how wonderful we are, but at the end of the day, it's the results show it. We don't have a crystal ball. We're not some idiot savant that has this special skill to just be able to predict the future. The things that we follow and what provides us with the results we get and the reputation we've earned is that we simply figured out a way to see where the money's going. And this is a corrupt market. If you think the market's fair, if you think the big brother out there is here to help you, then we need to have a totally different kind of chat. Right? The system is rigged. Of course it's designed to take money from the everyday person and fill the pockets of those that that aren't exposed to it. I mean, if you've watched any of the recent documentaries, there was one done on the wealthiest people in the world, right? The top 18 people, the wealthiest 18 people in the world have more money than the bottom 60% of the population put together. And money will continue to flow that way because of the way that it's all structured, right? And so as soon as we start to recognize it for what it is, fair or not, and recognize the system for how it works, it becomes a lot more interesting, it becomes a lot more profitable, and it certainly becomes a lot more fun. Assume everything you hear is a whole load of crap. and if you take that mentality and question everything, and look for where the manipulation is and where the big money is moving behind the scenes, that's where you start to get into some really exciting stuff. Again, at the link, acornwealthcorp.com/toast. All right. John, joined you a year ago. Best thing I ever did. Thank you very much, Joe. Good to see you. One-time fee. Yes, I think I answered that already, Andrew. Welcome on board, Jim, Karen, Eddie. Another Eddie P. question, does the Acorn service teach about patents and support? Absolutely. Absolutely. There's remember the key thing that led us to discover that the market was about to have a big drop was being able to identify this head and shoulders on the S&P 500. Right now, if you're sitting there and looking at that and going, well, John, I don't know if I would have seen that. Maybe I would have drawn that line on, or maybe I would have drawn a different line on, or maybe I would have connected, these highs and thought that it was that support. Like, the argument would come out, understandably so. Well, isn't the trend lines and things subjective? The answer is no. The pattern and the support and resistance that a chart is in is not subjective. The people that say that trend lines and support and resistance are subjective, people that say that are just it's an insurance policy of, if we get it wrong, right? Oh, well, look, I mean, anyone could draw it a different way. Lots of people will see lots of different patterns. No, that's not acceptable. Patterns, algorithms follow rules. That is defined. It is math, right? It is written into the program. And the way that they determine the pattern and the way that these algorithms operate are rule-based. They're not subjective. And so if you understand that concept, then everything is reverse engineerable. So the way that we determine the pattern is not a skill set. It's not something you're born with. It's not something you can be good at or bad at. The way that you identify the true pattern in the chart and therefore understand where you should get in, where you should get out, and what the probability of that success will be, that's a skill that is learnt. It's a skill that is taught. It is rule-based. Okay. So hopefully that answers your question. Do you use math, i.e. Fibonacci retracements, in your trading? Yes, it is something we teach. The most important, if I was to go through the order of importance, and all of this is covered in the course. Number one is, what's the pattern doing? Where is support? Where is resistance? What does that tell us about what's going to happen next? So the number one most important thing is the pattern. So I don't care whether the insiders are buying $100 million worth, unless the pattern tells us it's a good time to enter, the insider buying or selling on its own is useless. So I wouldn't buy a stock based only on insider buying. I wouldn't buy a stock solely based on what the chart is doing either. It has to be the marriage of both of those things happening together. And when we get both of those things happening together, we really accelerate the probability of success in the system and in our trades. All right. JB asks, thanks. So it's a weight of the evidence approach. Absolutely. Absolutely. I mean, trading is not a race, right? Everyone wants to sell you the bright, shiny object, how you could be a millionaire tomorrow if you just did this. It's not a race. And the people that get sucked into trading, highly volatile options and futures and Forex and all that stuff, it's people, I hear it all the time. It's the worst thing being in this industry for as long as I've been here for. When I hear a student say, I'm trading options, weekly options, because I have a small account. It's such a terrible reason to trade options. If you have a small account, that doesn't mean you gamble it. If you have a small account, what you need to be doing is focusing on how to find fewer trades with very high probability long term. Right? Quality, not quantity. That's the trick. It's not about going and gambling it on futures or options. Take, for example, this trade, CDEV. Now, CDEV is one of my, it's the largest position outside of one blockchain company I'm invested in. This was my second largest trade this year. So when this dropped down to 33 cents, because this is an oil-related company, the insiders loaded up. So while oil was going negative and going into negative territory, the insiders actually bought into their own stock. So I'm sitting there thinking, holy moly, oil is a great opportunity to get some special deals here. And my one concern is, well, what if the company goes bankrupt? So how do I offset that risk? Well, let's find the stocks where the insiders are putting huge amounts of money in. Surely they wouldn't put $500,000, $1 million, $10 million into their own company a week before they announce bankruptcy, right? I mean, that's just, you wouldn't expect to see that. So when we started to see that big insider buying on stocks like CDEV, that's where we loaded up, you know, and I think we put about 50 grand into CDEV at 33 cents. A few days ago, it hit our first target of $2.10, which was a 650% rally in just a few weeks. Right? That's where you get exciting stuff, and to me, that's what trading is all about. It's finding these niches. I mean, ET, another oil company which we are out of now, but I mean, we bought that at $4.67, I think. I mean, have a look at the chart. Right? It was exactly at the support that it had bounced from back in January 2016 after dropping from $36 all the way to $4, and then just turned around on a dime and went straight back to 20 bucks. Why? Because that's where the algorithms turned on and started buying. So this is a very simple algorithm that we run in our scans to find when there are stocks like this approaching those kinds of levels. So when we saw it there at $4, we loaded up. Now, not only were we able to see over 100% move, but guess what? The stock also paid a 27% dividend. So we also collected dividends on the way up, which were not cancelled by the insiders. They loaded up at the bottom around $5, $6, paid a 27% dividend, didn't lower it, didn't cancel it, and we also saw 100% move on the stock. I mean, this is a pretty special situation where if you ask me, John, what's the perfect trade? This is the perfect trade. You got the highest probability momentum pattern. You have insiders buying. You have a 27% dividend and 100% 4-week upside. So why would I compromise and buy any other stock that doesn't have those qualities, even if it means being patient and waiting? All right, questions. KMX. All right, we'll have a look at that. Welcome, Jimmy. Jimmy, you're most welcome. Pleasure to have you. And again, I hope that this unplanned kind of session has been enlightening, because again, with everything that's going on, I really just want to get right to the heart of what the approach is here, because there's a lot of money to be made. KMX, CarMax, that looks like a good short to me. You can see almost a head and shoulder actually happening here in the daily chart. I'm pretty confident if we go to the hourly chart, we're going to see that head and shoulders. Just give me a second. We'll go over to that. Go to the hourly chart. Yeah, there you go. Oops, hang on a second. That's not what I wanted. All right. So there's your head and shoulders on the hourly chart there. And we've also got a secondary head and shoulders system here. So I would be, if I was going to be playing this, I would want to see this break below 85.43, and I would have a target at 74.57. So this is when I talk about set and forget trading, everything we do is always pre-planned. Every single trade we do is programmed in when the market's closed, with our entry, our exit, our stop loss. Everything is pre-programmed. So the kind of thing I do here is I would pre-program, if this drops below 85.43, short it or buy these puts. If it drops down to 74 33, for example, take profit, sell half of the position, and then lower the stop loss to protect the rest of the profit. So the idea is to allow the strategy really to do all the work. So your job is just to find it, run the scan and say, yep, that one meets the rules, in which case this one would. Program where the trade becomes high probability, which is when it breaks through that support, being an oscillating trade, and pre-program where the rules tell you is the high probability space that's going to stop moving. So there you go. Moving averages, would you use them? No, you would not use them on KMX because it is not a momentum stock. So moving averages are useless on this stock because it is oscillating. So if it was momentum, we would use them, but it is not. It is an oscillating pattern. So you need to respect the oscillating support and resistance. And again, guys, that is not a skill you are born with. It is something that you learn. And in the course that you are getting for this $9.97, it covers all of that. There's a good at least 2 hours on support, resistance, moving averages, Bollinger Bands, like all the things that go into correctly understanding what's truly going on. All right. Welcome, Mary, Russell, Andrew. Mary R, you have purchased 3 times. I think there might be perhaps a glitch on your card. So no need to try and buy again. We will fix that for you. We'll take a look once we finish the workshop up here in a second. Other questions? CLDX. CLDX is a great long. We are out of it now, but I haven't looked at it in a while. Yeah, I mean, CLDX was huge insider buying. Went from $2.47 to $10. Right now, I would leave it alone. It may very well find support at 674. It is flagging, but the easy money's already been made here. Again, it's not something I want to buy at $7. I want to buy it at $2 and sell it at 7. So I'd prefer to move on to a new stock that's beginning its rally. Like, for example, I have a whole bunch of Reed, R-E-E-D. I own a bunch of this because, you know, it's $1. Everyone knows Reed's. They make those amazing software beverages, ginger beers and things like that. Huge insider buying. And, you know, this could very well be a $3, $4, $5 stock in a few months, you know. So I prefer to sell a stock after the big rally and find the next one instead of chasing it. So something like Very or yeah, or even those stocks. Yeah, exactly. So I would be out of them, looking for the new one. Okay. MU question. Are your methods compatible with most online brokers? Absolutely. Yeah, if your broker can't operate with the rules and automation that we use, then you should find a new broker, because it is very standard stuff. Like a bracket order, you know, being able to have your stop loss and your target programmed in is very basic stuff. If your broker doesn't support that, then I would say you are on a sinking ship, because this is very, very basic finance, guys. I mean, anyone that gets you into an investment without giving them the ability to have an exit plan is taking you for a ride. I mean, think about it. Ask yourself, when has your financial advisor or your mutual fund manager or your bank ever called you up and said, hey, Joe, we think you should sell everything and close your account with us because the market is about to head into a massive recession? How many people got that phone call in February, right? No one. In fact, a buddy of mine who was quite a well-known person, but he called me in late February, and he said he had, you know, he's a fortunate guy. He's done very well for himself, and he's had a few $1 million in cash sitting in his trading account. And he called his broker and said, I think the market's looking dangerous. I want to close my account, and I want to look at you know, protecting myself. the broker said to him, mate, you don't want to close your account now. This 5% pullback is the best buying opportunity we've seen in a decade. Now's the time to buy. Now, if he had followed that advice, he would have lost over $1 million of money he'd worked very, very hard for 30 years. He would have lost a big piece of it. So here's this guy, this so-called expert, saying buy every dip. But when do you get the call saying sell every rally? There's your evidence that the system isn't there to help you. Right? You always need to be able to have a plan of where you're going to get out if things go well, and a plan of where you will get out if things don't go as you expected. And without an exit plan, without risk management, it really is just gambling. And it becomes very hard to make those decisions after money becomes involved. MU, what would I do with it? I would be shorting this. It's an upward channel. It's an upward channel. There is insider selling, I believe, on this one. I've been watching it for a while. So I would be waiting for that to break down below 46.46. But it's not an ideal opportunity because it also reports earnings on the 28th of May. So I would be buying put options, and I would be getting out of those before earnings, because we don't want to hold into earnings, because it's difficult to manage the risk, and unnecessarily so. So oscillating, not momentum, therefore apply our oscillating rules, and that would be a short based on the upward channel. Okay. Let's have a look here. AMD, okay, we've got the last couple of questions and then we'll finish up for the day. AMD is more bullish than bearish. You can see here in the way that the pattern has formed, AMD has an inverted head and shoulders. So if we turn this upside down, you may be able to see it more clearly, that there is this head and shoulder pattern there. Okay, so an inverted head and shoulder pattern, if we turn it the right way up, hang on a second. Okay, there we go. So the right way up, that makes it bullish. Even if it was a downward channel, it would still be bullish. So we're going to have resistance here at $59.20 odd cents. So that's going to be the main factor for it to overcome. As you can see, it rallied up and already rebounded down off of that. I would be looking to enter this on a breakout above 56.83, or the more conservative way to go would be a break of 59.53. I wouldn't be shorting this. I would be going long, but I would want to make sure that I'm buying on a move up, because the main big risk here, guys, is we're facing another massive correction potentially, which could be even worse than what we saw in March. So if you're going to be going long, you better be damn sure that it is pretty much perfect. It needs to have the highest probability pattern. You need to have very big insider buying if it's going to give me the kind of certainty that I'm looking for if I'm going to be going in on the long side. And there are stocks I'm still buying right here, but most of my focus now is looking in the short direction, because everything is lining up that way. Okay, so if I was to go long here, I would probably be looking for it to break above 59.50 to make absolutely certain that this thing is breaking out regardless of what the market's doing. Okay, David, is there a number to call? The website is not taking my order. Okay, let me pop those details up on the chart here for you. Again, to enroll, you just go to acornwealthcorp.com/toast. And if for any reason you have any difficulty, I do see the orders going through on our end, mate, so it may just be something specific to your card, but feel free to drop us an email or a phone call right there, and we can help you out. All right. So there we go. Let's have a look at last few questions. mRNA. Can I take a look? Sure. I wouldn't touch it. This is no longer in a high probability pattern scenario. You had a nice flag there, which broke out from there. My target and where I would have exited would have been $73. It's gone beyond that, and it's had a very sharp retracement back down. You can see it's snapped through all of the moving averages that previously mattered that do not anymore, and we're actually in a kind of an upward oscillation trajectory. I think that it may have a little short-term pop-up to the 68, 69 area at best, but I would imagine that we're going to see $47 before we'll see 80. So I don't like the pattern here for a long, and I also don't like it as a short. So I wouldn't go for it either way. All right. IQV, sure, take a look at that. IQV. Oh, it's already one of our shorts. I thought it sounded familiar. Yeah, this is actually one of our current alerts. We've already suggested this as a short. As you can see, it's broken down underneath the moving averages. It's a lovely little breakdown. We suggested this 2 days ago as a short at, what was it, $142.89. Lots of insider selling, which you'll be able to see if we look it up. This is, by the way, just the basic tool I'm showing you in the webinar. We have much more advanced insider tools that we teach you in the course. But yeah, look at IQV, massive selling. You had 4.9, is that billion dollars? 2.9 million shares sold at $164. Yeah, I think that's $4.9 billion of selling from that insider at $164. Tell me what that says to you. These are huge sells from the insiders on this. It is an active alert. IQV, our stop signals at 147.73. Our first target is 101.23, and we would consider the 140 August puts is what we suggested on that alert. There you go. Okay, guys, we will have to finish up there for the afternoon. But as I said, I wanted to present to you what we're all about, the real deal. We talked about a whole bunch of shorts today. We've gone through a lot of the trades that we've been in and out of recently. And for $9.97, I can promise you will never buy anything of more value long term and short term than this. We've got our blood, sweat, and tears in this course, and the idea is we really want to earn your business by giving you a different way to go about things that focuses back on, might not have a sexy name, might not have a special, super duper software program that comes with it, but I can promise you it is some of the most powerful things that will move the needle in terms of your profitability in this kind of market. The moves are so big and they're so quick that you need to have rules like this, and you need to have a way to find the opportunities. So again, to enroll, just go to acornwealthcorp.com/toast. And again, as you noticed, that the whole presentation wasn't focused on trying to sell you something. It's about giving you value, and hopefully you recognize that and feel it's worth taking the next step. So again, acornwealthcorp.com/toast. If you have any other questions that I haven't addressed for whatever reason, just pop them through on the email, and we'll try to get back to you as quickly as possible. But those 20 spots are open, and that does include one-on-one training for the entire course. So once you get your registration done, you'll have an email from your coach to book your first appointment if that's something you'd like to take advantage of. Guys and girls, have a wonderful weekend and happy trading. So we'll finish up there for today. This is the end of the TradeThirsty event. Have a wonderful rest of your weekend, and stay safe, stay happy, and happy trading. Cheers.